The consolidation breakout strategy is one of my favorite strategies when I'm day trading. And this is how I like to describe it. Imagine the market as a spring that's being compressed, right? And for a while, nothing is moving. Things are just bouncing between a support and resistance level. But once the pressure is intense enough, boom, it shoots in one direction. That's what consolidation breakouts feel like. And in this video, I'm going to be walking you through, number one, how to spot a consolidation, how to trade them with discipline, but more importantly, how to avoid the trap, the dreaded fake out. By the end of this video, you're going to have a practical blueprint that you can immediately backtest and potentially add to your trading strategies. So let's dive in. Right. First of all, what is consolidation? So consolidation essentially is when price is bouncing between a support and resistance. So you can see price would be bouncing between this support and resistance. The top line being your resistance and the bottom line being support. So that's really what consolidation is. So whenever you see price moving sideways, it's really just bouncing up and down between a resistance and a support. That is consolidation. Now, why do we care? Well, because at some point in time, price is either going to break out to the top or it's going to break out to the bottom, right? And this is what you want to catch. You want to catch the breakout, right? So you just want to be able to identify when price is consolidating, and then more importantly, set yourself up to catch the breakout. Now, not all breakouts are breakouts because some of them are fake outs. And what could happen is market makers could break it out like this for a little bit and then reverse and go the other direction. And then retail traders are caught in the trap where they think that this is the actual breakout when market makers are actually wanting to take price in the opposite direction. And you want to avoid that because obviously you don't want to be bait. You want to go with the real move. So I'm going to walk you through the strategy that I use that enables me to obviously identify consolidation. And number two, it helps me avoid being caught up in the fake out. And if you're able to execute on this properly, you'll be able to see some really solid wins in the market. So let's take a look at this setup, right? And this happened on Wednesday, October 15th. So you can see on a 15-minute price was consolidating. And if you go down to a lower time frame, let's say the 3-minute, you'll be able to actually see it much better. So this is QQQ, and you can clearly see the consolidation. So there is our resistance, and we'll put our resistance in red. And this is our support, and we'll put our support in blue. So you can clearly see that price was just bouncing and moving sideways between these two. So now we know that price could break out to the upside, or price could break down to the downside. And in all fairness, anything can happen, right? Because we've been in a bullish trend, and it could be just consolidation just to take a break and then continue going up, or market makers might actually retrace all the way to the downside to grab liquidity or go to a certain point of interest. It could be a fib retracement, a fair value gap, or to grab sell side liquidity. So you never really know if they're going to go up or go down. So you just have to be prepared for both. If we take a look at what happens, right, you can see over here, market makers break it to the downside. Now, a mistake that a lot of traders make is taking the entry right here when it breaks out. Now, remember what I said is that you could be caught out in a fake out, right, where they take it down and you enter right at the breakout only for them to reverse and go to the upside, right? So you don't want to be that person that enters too early only for you to be caught in the reversal. Now, one of the things that I like to do is I normally like to identify the trading range to the downside, right? So if you can see over here, we have this trading range to the downside, and look for the midpoint for that trading range because that's where I would like to take my re-entry. So what I like to do is I like to look at that trading range that causes the breakout. And I would look to take my entry around the midpoint of that trading range, because normally what price would do is it will break out, come back, and then it moves to the downside. So that's kind of like what you're looking for. You see your breakout trading range, price will pull back into it around the midpoint, and then it breaks down to the downside. Now, the way for you to identify that the trading range is done, right, is if you look at the high that causes the breakout and the lowest low within that trading range, you just want to identify those 2 points. And over here, you can see this is the high that starts the move that caused the breakdown. And then over here, we're just forming lower lows, lower lows, lower lows, lower lows, and this is the lowest low. This next candle forms a higher low, so it means that the trading range for the breakout is done. Now, what you could do is you could just take your rectangle and then just go from the high to the low, right, like this. And if you go into your settings for your rectangle, if you come under style, you just look for the midpoint. Because what's that going to do, it's going to give you the midpoint of that trading range. All right. Now that we see that midpoint of that trading range, which is right here, you're looking now to take your entry from right there, and you could put your stop loss at the top at the resistance level, or you can give it a little bit of room. And then what you could even do is you could target this liquidity, right? Because now market makers are most likely going to come and target this liquidity. But this is a good place for you to take your entry and target the liquidity that's sitting to the downside, this support right here. And then obviously you could then use the resistance as your stop loss. So this is the trade you'd be looking to take. So if we press play, as you can see, boom, 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 price did exactly what we thought it would do, right? We first did the breakout to the downside, pulled into the midpoint of the breakout trading range, and then from there, price fell apart. Now, the reason why you want to be patient and wait for price to come back into this area is because you just want to protect yourself from a fake out, because price could continue going up, right? And it wouldn't be the fake out that you would have anticipated if you just entered the moment it broke out, right? So what you want to do is you let the first move go, wait for it to pull back into around this midpoint, and then from here, you can let price do its thing. So that is the consolidation breakout strategy that I like to trade whenever I see it, and it shows up in the market quite a lot. I encourage you to go and backtest this strategy, because I've been able to backtest it and test and trade it live with a lot of my community members and the people that are in my mentorship group. And we found that this consolidation breakout strategy tends to work all the time. A lot of the time when people see consolidation, one of the pitfalls is you're entering too early. And I just showed you one of the ways to avoid them is to wait for price to pull back into the midpoint of your breakout range. And then that's your confirmation for you to take your trade. If you just take your trade the moment it breaks out, it might work here and there, but you expose yourself to the fake out that market makers tend to like to do quite a lot as the way for them to manipulate the market. Now, if you're new to trading and you're looking to learn how to trade stock options or futures, every 2 weeks I have a boot camp where I literally walk through some of my top strategies with regards to options trading. And if you are interested, the link for the boot camp is below. And also, I have a mentorship group where I actually mentor people how to trade. Right now, we are accepting applications, and the link for the application is below. So if you're interested in applying and potentially joining the community, the link is in the description. So I hope that this video helped. I wanted to do just a quick little video sharing a strategy that I've been using in the market that has been working and has been really giving us some really good success with my community. and hopefully it helps you. So if you need to, watch this video over and over again, like and subscribe to the channel so that next time when I'm sharing more strategies, you can take those strategies and apply them, and hopefully you can be successful in your trading. And like I said, if you're interested in joining the bootcamp, there's a bootcamp that I do every 2 weeks. And if you just want to go straight to joining my mentorship community, there's a link in the description where you can apply to join my mentorship group. I'll see you guys in the next video.